Hi, everybody. Again, my name is Annah Dodge. I'm the Chief Financial Officer for the Jackson County School System. And so one of the I guess, kind of amazing things that I learned early on in my career was when you work and you get your paycheck, about 30 to 40% of what you just worked for goes to taxes and deductions. So if you think about it, you're basically working the first 3 to 4 months of the year for somebody else, to pay somebody else. So it's a little bit of a scary thing, but that's just kind of what we have to deal with. And you also, with your paycheck, you depending on your employer, you might get a paper paycheck, you might get direct deposit, but either way, it's very, very important for you to always review those pay stubs, look and make sure that there's no errors, that your personal information is correct, that your earnings are correct, especially if you're an hourly employee. So we're going to start with just an example pay stub. As you can see up here, it lays out your personal information, your gross pay, what you made, your deductions, and then your net pay. And of course, your personal information is just your name, address, possibly your social security number, maybe a phone number, maybe the type of employee you are at that business. And you always need to look and make sure that all this information is correct, especially your address, because of course, anything that is important about your pay or taxes or anything like that is going to get mailed to an incorrect address if you don't keep that information updated. Time, whether you get paid weekly, every other week, monthly, you need to look at this pay period, because that tells you the time frame that your pay is based on, and that helps you be able to determine that your gross pay is correct, because you look at this time, your work days, and make sure that all the days that you worked are included in your gross pay calculation. And again, your gross pay is, sometimes they lump it all into one amount, but a lot of times you also will have like your set amount that you normally make, any overtime, any extra time, any bonuses broken out, and then a total down here of your complete earnings. And here's the best part, tax withholdings. So we all know that unfortunately we pay a lot of taxes, and you should pay attention on your paycheck, on your pay stub, to these, because you've usually got your federal income tax withholdings, Medicare. And these deductions can, and usually do, account for a significant amount of what is taken out of your gross pay. And these amounts, especially for your federal and state withholding, are determined by a form that you complete with your employer called a W-4. On that form, you put how many dependents you have, that yourself, and that determines how much tax is going to be taken out of your check. And of course, the more dependents you put on this form, the less tax that's going to be taken out. But you have to be very careful, because if you come to the end of the year and you go to file your tax return and you've not had enough taken out of your paycheck, you're going to end up having to pay a lump sum to the IRS or to the state for your taxes. So you yeah, absolutely.
Okay. So one of the things that all of us are probably interested in knowing is when we fill out that W-4, right, and you guys mark that you're single, is it better to claim yourself as a dependent so they take more out? Because you will get that back if you go over, right?
Yes. So I'm not a tax consultant,
Yes.
but I can tell you facts that if you claim single and zero dependents, zero exemptions, the maximum amount is going to be taken out of your check.
Okay.
And so depending on your living situation, and if you have things that you can deduct from your income that reduces your taxable income, you could end up with a pretty significant refund when you file your taxes. So it's really best to pay attention to this, especially when you're first working or when you get maybe a significant pay increase. It's very important when you go to file your next tax return to pay attention to kind of how things fell out, and you can go back and adjust and change and update that W-4 form anytime. There's no deadline, there's no time frame. You can go and adjust that at any time, and your payroll department will immediately change your withholdings based on that new W-4 information. And then we've got the next, which is FICA. And FICA consists of your contributions to Social Security and to Medicare. Hopefully, all of you in this room will get to see benefits from those two funds, but kind of just depends on how things play out with that. But for the Social Security portion, it's 6.2% of your taxable income, and for Medicare, it's 1.45, which is 7.65%. Another thing to really pay attention to and to know is that if you are self-employed, you have to pay both sides of that. You have to pay the employee and the employer part of that. So you're not just paying 7.65%, you're paying like 15.3%. So it could be significant, and if you aren't doing maybe monthly or quarterly tax returns for your business, then at the end of the year when you file for your business, you could owe a significant amount, not just in income taxes, but in your responsibility for the FICA. And then unfortunately, taxes are not the only thing that comes out of your check. Depending on your employer and the kind of benefits they offer, you could have health insurance, vision, dental, retirement contributions, maybe some disability, maybe contributions to a flex account where those accounts will help you pay for child care or health care costs. So I see a lot of people's paychecks where the net is almost half of what their gross is after all the deductions. So it can be quite significant.
But at the same time, it is important to point out that once you get your full-time position that you think you're going to stay in, saving for retirement or signing up for some sort of retirement benefit
is critical.
Very important.
Critical. And the younger you do it, the better. I mean, a 2 to 5% start can be huge in 30 or 40 years. And so it's very important. And I know, I mean, believe it or not, it's hard. I mean, I know you can't tell now, but I was young one time, and it's easy to go and get your first job, and you want to spend your money on a house, and you want to spend your money on a car, and you want to spend your money on all these things that in the end aren't going to help you when you're ready to retire and actually go enjoy some things in life. So if there's anything that I can tell you, it doesn't even have to do with understanding your paycheck, but if there's anything that I can tell you, it would be invest and start early. It could totally change your future. And then of course our net pay is the most important because that's what you take home, that's what's in your pocket, that's what's in your bank account. And so it's, again, very important to pay attention to ensure that your gross pay is correct, that all the time you've worked and all the amount you should be getting paid has been calculated correctly, but then it's also very important to pay attention to the deductions. I mean, clerical errors happen, we're all human, so it's very important for you as the employee to stay on top of that so that you're not trying to correct 10 or 12 months worth of errors, and you get those things taken care of immediately. And again, regularly review your check stubs. review the information, review the calculations, because what you take home, your net pay, what you take home, knowing that and knowing how you got there is going to help you plan and budget and try to take care of bills that you have, and you're going to be able to do that much, much easier if you understand how your pay is calculated and what's going to be deposited in your bank account at the end of each pay period. But that's about it. Are there any questions? I mean, it's pretty self-explanatory.
Isn't there like a way that you can get like no taxes taken out if you make under a certain amount? Like for most high schoolers that would apply?
Yes, because you've got your standard deductions. So basically, if you make less than that amount, you're going to end up having no tax liability. So even though taxes are taken out, you're going to go file a tax return and you're going to end up getting all that money back anyway, because your standard deduction is more than what you made.
And do you have to go somewhere to file that, or?
A tax return?
Yeah.
Either way, if you feel comfortable with it. I mean, there's plenty of online programs, online options, tax software that can be used. But for somebody that just has like a simple tax return, I mean, you can,
You do it for free at TurboTax too.
yes, you can,
Because my son, when he started working, I mean, TurboTax will actually do the single form for like y'all as high school students.
Yep.
You can do it for free online and you can submit it there.
yeah.
So do you just go to like your job and like ask for the information on it?
Yes, you'll get at the end of every year, you're going to get, your employer will give you a W-2 form. You use that W-2 form to then go file your taxes. It provides all the information line by line. It tells you exactly what goes where when you're filing your taxes. Anybody else?
Y'all got any questions?
Well, that's it then.
All right, thank you so much, Ms. Dawn.
Pay attention to your pay. It's very important. Thank you.